Hello, everyone. Welcome to the webinar Understanding Business Financial. First of all, if you allow me, I will introduce myself. I'm Eduard Garriga-Bach, a co-founder and business partner of Cirial 180. Cirial 180 is a boutique law firm specializing in legal and financial service with entrepreneur mentality. Our work starts when the other finish. But I don't want to talk about me or my company because I know that you have come to listen to the webinar and know the wonders of my company. Apologize for my English, but you know that here in Spain we are not very skilled with language, even less. We will start from scratch. We will create a company and we will see how its numbers are generated. How are we going to do it? I'm going to imagine that you are investors and I would like to invest in a company. For example, let me to think. For example, a production and distribution of happy pills. I say happy pills, which is not the same as drugs. Drugs are bad for your health. Now, imagine that I have convinced you and you think that investing in this business can be a wonderful idea. Probably you will have a basic questions, sorry, the question that conditional all the rest. And this question is, what would we need for to create the production and distribution company of happy pills? Let's start with the balance sheet, the account that give more fear and tell us what the company has. Returning to the about said, what do you need to create the production and distribution company happy pills? So really, someone's here that I have very close it would say a mark and a patent for the magic formula of the pills. Well, there we go. Another thing that we need is a place to create these magnificent pills for happiness. What people often say is open the product we are going to sell or the raw material to do it. And here we add the inventory. Given that our company's production and distribution will be necessary to think, right? The first, some machines to produce these pills, and then some scooters, cars, or transporting that they like more to distribute the product. How are we are in the 21st century, and given that 90% of the companies already have some, we will put computers. You cannot imagine how complicated accounting can be without computer. Therefore, always we also have computers. And as imagine that you don't want to be standing and you need to support the computer somewhere, we also are going to put furniture. That another things need a company and it's not usually put is cash. You need to constantly buy things, and I assure you that you move constantly when you have a company. Finally, I'm going to add another thing that the company needs, and it's people, right? Meg, wrong answer. Also, the abolition of slaves took long to impose itself in Spain, and in 19th century, the present British government, which has abolished slavery. So, therefore, people are neither bought nor sold. People never go on the balance sheet. People are an expense caused by the production of the service. Never will be anything we can buy. To make it more visual, we'll put a value on the things and we have in the company. I will put 100 for the button, 85 to the plan, 30 with the magnet, 15 for the furniture, 10 for transport, 10 for computer, 25 for inventory, and 25 more for cash. These are the investments, the things we have to get what the company does. So we already know what we need. We see that all his value, this value half of 300 million, because it's the summatory of 100, 85, 30, 15, 10, 10, 25, 25. Now, the next question is, how do the finance of our company? Basically, there are only two ways to do it. As a family that decides how to finance their investment, and there are just these two, is or with own funds or with indebtedness. Regarding indebtedness, here we will distinguish between with long-term liabilities and short-term liability. And in the prudent ways, without other consideration, there are many about the financing structure of a company. We'll put with a logic prudence 150 long terms, 15 for short terms, and 100 for common stock. We will can investment assets, and to the financing of the asset, we can call it liabilities and owner equity. And assets, it's the things we have. Then the initial balance, we apply the star technique, and we will take a step back and the continuing climbing. We will consolidate the concept we have seen before. We will try to understand how the initial balance is reached step by step in real life. First, we have to create the production and distribution company of Happy Pills in your invested money. This is the first thing that counts when we register our company. We go to the notary. We have the founding charter of the company, and the first balance, it's very simple. We will start with the initial capital of 100, and his capital is available or as we call it here, cash. This is the first balance. Check it, because it's very easy, but it's very important to understand that one. What is the next? How do we get to the balance that adds 300 of investments and 300 of finance that we saw in the last balance sheet? Next is we buy the plant. Plant, I mean the factory, no plant like a floor. And the balance will be same as previous one. Common stock will be 100 and the plant 200. How to finance it? First, what to invest it in a plan which is worth 100. Second, how to finance it. The process is always the same. What to invest and how do we finance it? It's always like this: first investment and then financing. This place of 100 will finance it in, for example, 20 of cash that will take it out of savings banks. Therefore, 80 will remain. We will put 60 of the long-term liabilities, and 20 that are missing will be short-term liabilities. If you want, I repeat the same thing to understand better. It's no problem. Let me just a second. The same. We buy a plan or commercial local. It doesn't matter. And as I said before, the balance will be the same as previous one. Common stock will be 100 and the plan 200. How we finance it? We take 20 of the cash. We take a credit with long-term liability 60 and short-term liabilities 20. And let's see if it's fitted. Yes, it's 180 of investment and 180 of financing. It's nice because we see that it's fitted, and then we can say the balance, it's balanced. It's very important to be exactly same the assets than liabilities and owner equity. It sounds very logic, but always have to be balanced, the balance, because if we have difference the assets with the liabilities and owner equity, we have a wrong balance sheet. So now let's continue. For example, with machinery, we have already have a plan of 100 million dollars, whatever. Cash of 80, common stocks 100, 60 of long-term liabilities and plus 20 short-term liabilities. And we buy the machinery at it costs 30. How do we finance it? This machine of 30 will be financed 10 of cash, and that will take out of our savings bank. Therefore, 70 will remain, with 10 of short liabilities and 10 of long-term liabilities. So we'll put 70 of long-term liabilities and 30 will be short-term liabilities. Let's see if it fits. Yes, 210 of investments and 210 of financing. You can see downstairs in the corner. We go to the next step, to the account profit and loss. Now we have to imagine again, it's been a year, and after a year, we hold a general meeting of shareholder, and all of you as partner expect the information of profits and loss account. You want to know how is the year has gone. So I presented this profit and loss account. This account starts with the sales revenue. Remember, that is the profit and loss account. It is the results of subtracting income and expenses. I'm just going to tell you about the income obtained during this exercise, and I will subtract the expenses. The result will be the benefit we have generated this year. The revenue from sales is to 200. Do you think it's good or bad? because in the end, what I want to know is the net of profit that we will obtain at the end of this income statement that will inform us of the net profit obtained during the exercise. Anyway, we have 200 of sales. Any more income? No, that's it. From now, everything will be expenses. It's a very Spanish name, Spanish expression. It's a via crucis of expenses. We will see if the end we have some benefits left. What expenses will we subtract from this income? Well, many and varied. A company is like a black hole of expenses. Invoice always arrive that you have to pay, and it's good to classify it, organize these expenses to later analyze them and make decisions. When we classify expense in a certain way, and there are many ways to do it when do it. The expenses are called cost. A cost is an expense allocated in a certain way. And I repeat, there are many ways to do it. There are the direct and indirect costs or cost of sales. Also, you can call it like a cost according to the activity, etc. Here, we will choose a simple one. We'll classify the expense into fixed cost or direct cost and variable cost or cost of sales. The direct cost or fixed the direct cost or fixed cost are the expenses that regardless of the volume of sales, they must be paid equally. For example, the rent of the local commercial, it not matter if I sell a lot of a little, the owner will charge me the same. That's it. Rental are a fixed cost. They are expenses that we will have to do. Sell a lot or little or nothing. Always we have to pay. And on the other hand, the sales of costs or the variable costs are those that vary according to the volume of sales. If I sell a lot, they will increase, and if I sell a little, they will increase. Remember, fixed cost or direct cost, variable cost, or cost of sales. Before continuing, I want to leave one thing clear regarding buying, spending, etc. For example, someone could imagine a situation like the following: mid-year, I buy a large stock for the inventory, and it costed 10 millions. Question: these 10 millions that I bought of raw material are variable cost? The answer is not. Something is spent when it's consumed, not when it's paid. The location of an expense in the annual income statement is made in the year it was consumed, not in the year that it's paid. Very important. Was consumed, not in the year that is paid. The imputation of an expense in the monthly income statement is made in month that has been consumed, not in the month that is paid. Well, return with a picture for to know the variable cost or sell-off cost of the company, which are consumption of materials and direct labor. That's this, we calculate the consumption of materials. Initial stock, more purchase, less minus final stock. The final result will be the consumption, and we will put it there. So we have direct labor, another variable cost of say 80. We already have what is called the gross profit. In our case, it's 120. It's really easy. Sales was 200 less 80 of cost of sales, we have 120 of gross profit. Now we subtract the fixed cost, 20 is right, and now we will have EBITDA. EBITDA, the meaning is earning before interest, taxes, depreciation, and amortization. And also something that we'll see in detail later, depreciation and amortization, and will be 20. We commented that one later. Now we have EBIT. The meaning is easy. It's earning before an interest, taxes, which in our case are 75. This is the first part of the incoming statement. Very important. What do this 40 million EBIT mean? Attention, this is the ordinary result of my ordinary activity. That it's to say producing and selling happy pills in this financial year, generating 70 million of ordinary profit. All this before seeing how the financing affects and how taxes affect us. And so the first part of the incoming statement up to the bit. In this first part, we stay in the ordinary profit or EBIT. That is what the business generates regardless of the financial policy that the company has followed and of the fiscal policy or tax policy in which it's immersed. Imagine that our company, it has been fully financed with own funds, without indebtedness, without demand, everything is net equity, everything is our funds. What interest should we pay? 0. Imagine, in addition, that the company, you will be in a tax haven where you will not pay taxes. What taxes should we pay? 0. That is, the net benefit will be like debit, 75. The 75 millions that the company has been able to generate, the remain net for her because it will not pay interests or taxes. But let's go back to the reality, to everyday life. The companies in general have indebtedness and they also pay taxes. Well, suppose our company pay interests of 25 million. Well, we have a B without T of 50 million. Now let's assume that from taxes we paid about 25 millions. It's done. Our net profit is 15 million. This is our net profit in this first year of activity of company production and distribution happy pills. We generate 50 million of net profit. What do you think? Is right or wrong? Many will think very good. 15 million positive the first year, million or thousand or hundred. It's a matter. Do you know that? Do you know what's happened? I remember my first experience as an account when I was a student. I was in a company. I remember that the businessman, a small businessman, I told him that the first years he has won, I don't remember now, but like 15. I still remember his face. He started me say, "How dare you tell me this? That you don't see that I don't have liquidity, then I can change the car. That I cannot keep the payment of my bills. What I will day fix because I don't have money. How dare you tell me that?" And I remember thinking that was true. The account could be a liar. You can have benefit, but the account to 0 or negative imbalance if the clients don't pay you. Remember, the income statement in forms of income minus expense. It has nothing to do with change and payments. That what the treasury account tell us, or if you are not very serious, the balance of your bank account. That's what the treasury account tell us. Revenues and costs are not changes and payments. The two keys variables for a company to be viable, it's positive and sufficient benefit. For me, it's like the engine of the company, and positive treasury. The company have gasoline or petrol. Balance sheet maybe will be the chassis of the car, but remember, the most important, have positive and sufficient benefit, the engine of the company, and have as well a positive treasury. If the customer or clients, they don't buy us, we have a problem, because we can have benefit, but the company is dead. For finish, we'll talk about cash flow. What is cash flow? Cash flow, it's benefit minus depreciation and amortization. But again, what is depreciation and amortization? What has been spent? Amortization and depreciation is what has spent in that period, the not current asset, it will spend on the life of each specific asset. Depreciation and amortization are expenses, they are not paid, do not affect treasury directly. Depreciation and amortization are necessary expenses to generate sales, but they are neither obvious nor intuitive, since they don't present it as with invoice. If we use an asset in our activities, machines, IT elements, vehicles, etc., even if we have not paid for it, it is spent years after year unexpectedly, this expense, which I don't pay, is what have to take into account in the income statement, so as not be confused. I will explain again that one. For example, when I bought a car for 30,000 euros, I put in my balance sheet. The problem is every year happens, and car don't have the same price the first year than the second year. You know, the things lose the value, and one car, if I say the second year and I put in my balance sheet, the car cost have the value of 3,000, it's a lie, because if I sell my car in the second year and I bought for 3,000, probably I can sell for just 20,000. Maybe it's easier to understand with mobile. For example, if I bought an iPhone 8 or X or 7, it doesn't matter, and I bought last year, you know, iPhone cost around 700 euros. But if it cost me last year 700 euros and I try to sell, if I try to sell now, it's not 700. It's costing, I have to sell for like 500 euros, because it's depreciated the value of this product. So in this case, thank you very much to everyone. I would like to thank you if you have any question. Here I will give my email. And for another hand, I would like to ask you what kind of topics you would be interested in the financial field for another webinar. And just announced that in upcoming legal webinar, which Alexis will be present December 17, 10, 11 a.m. And commend you that we have online consulting session that every month entrepreneur will join as you question for free. Please remember you can contact me to the email account. We use it to work with entrepreneur. Always try to ask any question you have. Sometimes you can feel like stupid if we make basic questions. Never keep your question. Ask whatever question. Don't be shy, because the accountability can looks very hard, but it's not hard. It's very logic, and just we have to understand this logic. Again, if you have any question of that, please feel free to contact me. You will be welcome to our office, and you contact as well with Astrid, and Astrid can contact with us. And thank you very much for your time, and we will see you in the next time. Have a nice day.